we're really excited about Fearless this year because it really kind of gave us an opportunity to step back, look at the bigger picture and say, where are advisors going? Where are wealth management firms going? And one of the great challenges that our industry has is that the average wealth management firm, if you take away the impact of the market, is only growing about 2% a year, and that's not enough to sustain real growth businesses. And so, we're pretty excited about our vision for the growth platform going forward. I think that there are a tremendous number of things we can do to help these firms spin up the growth flywheel, really help them create a consistent client experience, and help them actually leverage compliance as a growth lever for their firms. And this is a solvable problem. The great news is we get to look out at other parts of the technology ecosystem and watch how those businesses are solving the growth problem and apply some of that with next-gen technology in our industry. We're super excited to be at the forefront of that, and it's a big part of what we've been talking about here at Fearless. It's a really interesting market environment, and that leads to challenges with advisor retention that really can only be solved by solving the expectations gap. When results are out of alignment with expectations, that's where the problem gets created. And so, one of the things that we announced today was the big upgrade to check-ins, which makes it so much easier for advisors to actually see which of their clients have higher expectations than perhaps the results that they're getting, and really get into a conversation with those clients and realign expectations. Most of the time, that is a savable issue when a client leaves an advisor. And we think that giving advisors better visibility into their book of business will drive. We've seen it happen. One firm with 12 advisors told me we took their retention rates from the low 80s to the high 90%, saving their firm over $1 million of revenue a year. It's a big deal to have a high retention rate. I feel like growth is the driver, it's the lifeblood of businesses. And so if wealth management firms are not driving organic growth, life gets really hard, particularly when we get into tough market environments like this. So here we are in a market environment where the market is down 20, 25, maybe heading towards 30%. A lot of times that can translate into assets being down 10, 15, 20%, depending on the risk mix of those assets. The best advisory firms are actually only down 5, 6, 7% because they have strong organic growth that is offsetting that. So super important in bad market environments, important to be able to grow nicely when you're in good market environments. And that's why we really believe that there's the space to take modern cloud-based technology and the principles of pure play technology companies and apply them to the problems that we have in our industry to really help drive growth. And I think that works in concert with your CRM. I think it works in concert with your asset platform, but a growth platform is what helps drive, spin up that growth flywheel, create the consistent client experience and drive alignment across the firm.